The Reserve Bank of Australia, or RBA, has decided to keep its benchmark interest rate unchanged at 4.1%. This decision comes amidst a backdrop of both positive domestic indicators and growing global uncertainty. The RBA's move reflects a cautious approach as it assesses the evolving economic landscape. Policymakers are balancing the need to support economic growth with the imperative of keeping inflation in check. The decision to hold rates steady was widely anticipated by market analysts. They had closely watched for any signs of a shift in the RBA's stance. The central bank's statement acknowledged the recent easing of inflationary pressures. However, it also highlighted persistent risks stemming from global economic headwinds and geopolitical tensions. The RBA's decision-making process has been particularly complex in recent months. Australia's economy is grappling with a unique set of circumstances. On the one hand, the country has witnessed robust economic growth, outperforming many of its developed world peers. On the other hand, external factors such as trade tensions and slowing global demand pose significant downside risks to the outlook. The RBA's decision to stay put suggests that it is prioritizing stability for the time being. This approach is likely aimed at allowing the effects of previous rate hikes to fully filter through the economy. It also gives the central bank more time to gather further data and assess the evolving global situation. One key factor behind the RBA's decision is the recent moderation in inflation. Australia's Consumer Price Index, or CPI, rose by 2.4% in the year to February. This figure came in below market expectations and marked a slowdown from the previous month's reading. The easing of inflationary pressures is a welcome development for the RBA. It provides the central bank with greater leeway to maintain its accommodative monetary policy stance. However, policymakers remain vigilant about the potential for inflation to re-accelerate. Supply chain disruptions and rising energy prices continue to pose upside risks to the inflation outlook. The RBA is also mindful of the potential for strong domestic demand to contribute to price pressures. The central bank has indicated that it will continue to monitor inflation developments closely. RBA Governor Michelle Bullock acknowledged the recent progress on inflation, but stressed the need for continued vigilance. While inflation is back in the target range, it isn't enough to declare victory, she stated in a recent speech. The board needs confidence in its sustained return. The global economic outlook has become increasingly uncertain in recent months. This uncertainty is partly due to rising trade tensions, particularly between the United States and China. The RBA has expressed concerns about the potential impact of these tensions on global growth and financial markets. Another source of uncertainty is the ongoing war in Ukraine. The conflict has disrupted global supply chains and contributed to higher energy and commodity prices. The RBA has noted that the war is likely to have a material impact on the Australian economy. The RBA is also closely watching developments in China, Australia's largest trading partner. China's economy has slowed in recent quarters due to a combination of factors, including COVID-19 lockdowns and a property market downturn. A sharper than expected slowdown in China would have significant implications for the Australian economy. In its statement, the RBA acknowledged that risks to the global economic outlook have increased. The central bank noted that financial conditions have tightened and that uncertainty about the outlook remains elevated. Despite the global headwinds, the Australian economy has shown resilience in recent times. The country's GDP grew by a stronger than expected 1.3% in the fourth quarter of 2024. This growth was driven by robust consumer spending and a recovery in business investment. The strong GDP figures are a positive sign for the Australian economy. They suggest that the economy is weathering the global storm relatively well. However, the RBA has cautioned that it is too early to be confident about the outlook. Adding to the complex backdrop is the upcoming Australian federal election, scheduled for May 3, 2025. The RBA's decision-making process is taking place in the context of a caretaker government. This situation limits the scope for major policy announcements. The RBA's decision to hold rates steady reflects a cautious approach in the face of both domestic and global uncertainties. While inflation has moderated, concerns linger about its trajectory. Global economic headwinds pose downside risks to the outlook. The Australian economy has shown resilience, but the RBA remains vigilant. The upcoming election adds another layer of complexity to the economic outlook.